Ladies and gents, welcome to Soul Brothers. With myself, Simon, where it is our job to throw you into the Solana rabbit hole and show you around in our exciting ecosystem and also introduce you to some interesting personalities that are building and tinkering on Solana. And today I am joined by Catherine. Catherine, welcome to the show.
Thank you so much for having me, Simon. How are you doing?
I'm very well, and I'm gonna start to kick this off with a very brief introduction. We're gonna hopefully get to know you a little bit better today in this session. But obviously, I did my research. I have a few key data points about your pretty interesting backstory. I have to say, when I did my research on you, Catherine, I was like, okay, hell yeah, I'm looking forward to this conversation. You are today the head of product for digital assets at the Solana Foundation since January 2026. So this is quite recent, if I'm not mistaken.
Indeed, I'm just passing my 1 month anniversary, so.
Hell yeah. Welcome to Solana. You came from a very interesting background through traditional finance, economics, blockchain research, institutional payment infrastructure. So like it's a wide area, wide range of things that you've been working on. You spent more than 5 years at Visa. And at Visa, you also tinkered at CBDCs, very interesting, at stablecoins. You pushed tokenization initiatives at Visa and worked with more than 40 central banks globally, which is also very impressive. And I'm definitely going to ask a few questions in this direction today. You do have a background also in quantitative finance. You spent some time at Man Group, at JP Morgan. You went to Stanford for your master's in economics, but also with a very good focus on technology. You did some courses about coding. I think we can talk about this as well today. You dived into blockchain research. You worked at crypto startups. You worked at Visa, and then you ended up at Solana. Actually, your story sounds like the perfect fit for Solana Foundation. I can understand why you are where you are today. You're bringing hands-on experience across both traditional financial systems and also on-chain technology. And now you are helping us to build the internet capital market infrastructure. And that, Catherine, is actually your answer of what Solana means for you. Is that correct? Internet capital markets. I've read that somewhere.
Very much. Yes. That was when I updated my my job. And it's true, like the internet capital market really captures everything that I believe what blockchain can deliver, and I think Solana just summarizes so accurately and very succinctly. So yes.
Can we double click on that topic just for a second, because there's like it entails so much. What does internet capital markets really mean for you? What are we changing in the world compared to how the world looked like the past, let's say since 1920-ish, when capital markets were like brand new, and then the last 20 years, we saw a lot of acceleration in that market. But internet capital markets now is a very new narrative. It is coined by Solana, really, that term, and I think it means different things for different people with a lot of overlaps. What does it mean for you? What does it entail? What changed, or what is changing right now? We're in the middle of it, compared to just capital markets.
Yeah, I think firstly, it does reflect how I think a lot of the people nowadays are thinking about what blockchain can do as that underlying infrastructure to change the overall financial market infrastructure. And this is actually, for me, coming from that's, in your intro you mentioned about CBDC and tokenization, because it was interesting observing how the central banks, as well as, the sort of financial institutions, have evolved their thinking over since I would say 2020 up till now. Because at the very beginning, I think there's a very clear tension between crypto versus TradFi. Is one or the other? Is one replacing the other, or vice versa? Whereas I think nowadays it's very much a symbiotic relationship, right? In the sense that as financial institutions are thinking about what needs to be done, a lot of the things is really the back end kind of piping works, right? Because you don't have 24/7 kind of always on global infrastructure. And there's no reason why we shouldn't. Just because Hong Kong market is trading at a different hour from the US market, it doesn't mean that these things should not be like money should be flowing freely from one or the other, nor the traders stop from trading from one market to the other. So all these things kind of increasing, I feel like, is sort of basic prerequisites that traders demand, especially people who started trading in the crypto market as opposed to financial, like traditional finance. They're already doing 24/7. So why should they go back to a system that doesn't work that way? So from that perspective, I think to a large extent, as we're thinking about what is the use case for blockchain, it has always been in the capital market, right? Let's not forget that Bitcoin paper was born out of 2008, the financial crisis. And then we talk about all these things that say stablecoin can be used. And guess what? Stablecoin, the first use case and still the most dominant use case, is in finance, is in trading. And as we're looking at whether even I would say even NFT or meme coins and stuff like that, ultimately, it's all about finance. You know, when we talk about capital market, it doesn't mean it's only for institutional and wholesale market. It's like finance for retail as much as for wholesale as well. And hence, I think this overall how money works, how the capital functions, like the underlying infrastructure can change. And then couple that with internet. I think what's interesting around that is internet captures a lot of the things, right? And we've been comparing a lot between blockchain, you know, being the new internet. And I think there's one really important thing to highlight, which is we should always have like blockchain the same way as internet being a neutral like base infrastructure that needs to be open and permissionless. And that again is the fundamental philosophy about what blockchain is. It shouldn't be any sovereign control nor any kind of large entity control, but it is an open infrastructure. And of course, on top, you can build things in which it's subject to whatever requirement, compliance, etc., or it can be completely permissionless. But that is the beauty of having the internet as the base layer. And hence, I think the blockchain is kind of carrying the same significance as well.
I think we're rattling the system. Like we're changing a lot of fundamental things of capital markets by bringing them on chain, by making them available 24/7, by making them to an extent permissionless, especially for retail. We asked one of our friends from Vietnam the same question, and we asked her, "What is internet capital markets for you?" And she was like, "The way I explained to my mom is, I can buy stocks now." Because she couldn't before. she just couldn't. Like there was no way because in that jurisdiction it wasn't possible. And that's what everyone gets, by the way. That is a beautiful narrative that we were lacking. During my research, I also saw that you like to speak about we need to move away from proof of concepts and MVPs and that kind of state of experimentation and tinkering into real use cases. Where are we right now when it comes to the proliferation of blockchain technology and internet capital markets? Where are we on that timeline? Are we already past the MVPs? Because that's what it feels like for people like myself that are in the bubble. But I'd like to get your view because you have a very wider view on that topic.
Yeah, I mean, that's a great question because I do think it varies by the industry, specific companies, you know, we're talking about.
Sure.
Because if anything, I would think asset managers have been moving really quickly. And there's a clear reason why, because, you know, on blockchain represents a new capital market. There's lots of crypto traders. There's like $250 billion worth of stablecoin liquidity. So it's kind of a very easy rationale to make for asset managers and be like, I need to bring my assets on chain because this is where the new allocators are at, right? And this is where they're all on chain. So I need to bring more investable assets on chain for them to then allocate the capital into. So I feel like if I look at it, I think asset managers have been doing a great deal because, you know, people like Franklin Templeton, BlackRock, Fidelity, they've all started building seriously. Of course, lots of experimentation, but seriously already since 2022 and when we were still in a very deep bear market. So that was really good sign. I think the banks movement, like I would say, started last year, right? And we all know it's because of the Genius Act, the new regulatory environment. I think for the first time, especially, you know, last year I was still at Visa. I think every single conversation I've been having with banks, what seemed really interesting in 2025 was it's a very much top-down level discussion, i.e. the CEO of each of these banks are asking, you know, the most trusted, you know, whatever the senior advisors to come up with a strategy plan of what they need to do with stablecoin, what are the use cases, what's relevant for the bank itself. And I think that's a serious change. I still don't know to what extent that will really turn it into commercial product, just because I think banks have a lot to navigate in order for them to execute, right? I mean, it's banks are large, but also there's so many regulatory things you need to navigate. There's still like lots of things that needs to be cleared out in relation to Genius as well as Clarity Act and stuff like that. So I feel like for the banks, they're still sort of in that discovery mode, so to speak. But then, you know, other parts of the segment where we also saw Galaxy, right, IPO, and then they tokenize the stocks and bring it onto Solana. So very, very different spectrum of things. I would say they are the most crypto ready and crypto native type of kind of institutional players, versus you have the more sort of traditional finance folks on the other end that start to recognize and start to hear a lot more from both the investors as well as the users of the need of having stablecoin or having blockchain. But it's going to take time for them to move from that POC MVP stage all the way to something commercializable, I guess.
And there's also a form of new banks emerging. My personal aha moment with blockchain was exactly that. It was this realization of, hey, I'm replacing my bank services right now. Like I'm using a wallet to log in. That's it. And then I have this front end that is running on a permissionless protocol that is running on it's a blockchain, it's a decentralized blockchain that no one really, not a single person controls. But I can use it to send money from Germany to USA. I can use it to take out a loan. I can use it to get yield on my money. There was very early Solana products. They already did that, like 2021. And I felt like, this is replacing banks to an extent. So would you say that it is also a technology that banks might be not embracing because it is also disruptive for their business? And some of these newer technologies and these newer form of banks are potentially replacing the old banks that are out there. So I think there's a lot of colors, there's a lot of shades to this question of, okay, where are we on the timeline, and are banks actually gonna keep pushing for this technology to embrace it, or are they maybe just scared? Because we've seen it in the US, especially during the Operation Choke Point. They tried to get rid of crypto. At least that's what the headlines told us afterwards. Is that a thing? Like, do you think banks are over that hill now and they're like, okay, it's happening, whatever, we need to embrace it somehow. Maybe we can try to use regulation to our favor. But how do they look at it? I think you spend a lot of time talking with institutions, even with central banks and with banks. What's their stance? What's their mindset right now to this whole sector?
It's a very, I think, complicated, nuanced sort of thing when it's thinking about how it's sort of, you can call it innovator's dilemma or not, but, to your point, yes, the existing business model will have to change whether they like it or not. I do think, to be fair to the banks, since 2025, there's a real willingness to at least to learn, right? It's not just, I want to take this off the box and move on to something else, but they recognize stablecoin is here, blockchain is here. And to be honest, I feel like things like Genius Act is a good forcing function for banks to really think about it seriously. And that's probably the goal of the administration, to say, don't just brush it off or don't just try to fight against it, but I'm creating a level playing field, hopefully, for banks as well as these new comers to compete on the same level playing field. So I think it is a good forcing, which is what I'm saying is very much coming from a top-down perspective. If you went to Davos or whatever, like literally digital assets is a key topic amongst all of these CEOs as they're talking about it. Now, in terms of, I think, how to think about it, I think there's many different moving factors, right? Like, one is on the technology. There's nothing any single entity or country can do to say, just, I don't like this piece of technology, I'm just going to shut it down. It just doesn't work that way. Technology is very organic, very decentralized. I think it's going to happen regardless. Second one is on distribution. Distribution is a very key thing, and that is what banks have in terms of stronghold, right? I think it's impossible to think, whoever it might be, to compete with Chase and Citi of the world, it's going to take decades, if not more. I mean, maybe in the internet age, it might be faster, but that stronghold is extremely valuable. And I think for banks, they actually have a very natural advantage. As we're thinking about, banks tend to ask this question, right? Like, who are the main players in stables and how do we think about it? Well, we all know it's Circle and Tether right now in stablecoin field. But, if we all believe collectively as industry that stablecoin is going to grow into trillions of dollars, and you ask, is it just going to be Circle and Tether? I mean, clearly the answer is not going to be yes, because you have all these existing banks who are not just going to sit on the sideline with their distribution network and do nothing. Now, how quickly can they move? That's a different question. So I think that's the second factor. And to me, the third biggest macro thing is on the demographics, because you like it or not, the young Gen Z of the world, they want to trade in crypto. They want to have access to these. They understand how stablecoins, USDC work. Some of them might not even be comfortable using cash or even credit card, right? So in those situations, I think the banks definitely 100% recognize if they don't do anything, they're going to lose the distribution base over time. And we're talking about like a 20-30 year trend, right, over time. So for them to compete with Robinhood, Coinbase of the world, who are becoming the new banking rails, they got to do something. So I think these are all the sort of competing forces come together. But it's good. It's a nice forcing function to help the banks move along. We don't think it's going to move that fast, but I'm very positively hopeful that, you know, things are sort of changing in the right direction.
Okay. While the prices are down and the markets look a bit dangerous right now, and everyone, you know, has that weird gut feeling, this is what I'm hearing from every professional and everyone that works in the industry is we're definitely moving in the right direction. And the place where it is the most clear is on Solana, really, right now. And I suspect that this was one of the reasons that brought you here, because you have a very strong career. You can probably work wherever the fuck you want, excuse my language, but you have, you know, your doors are open. It feels like you made a very conscious choice of saying, this is actually a good challenge. I want to be there. So I have two parts of that question. The first question starts with your blockchain pivot, because you came from traditional finance. I mean, first you came from economics, from economy, and then you came into traditional finance. Then you worked at JP Morgan. You spent some time there. You were in the risk management department at the MAN Group. So you did a few things in that area. When was that aha moment when you were like, I should spend more of my time on this earth learning about blockchain and that technology? Was there any moment that you recalled, any aha moment that told you this is it, and made you to deep dive? If yes, what was it?
Yeah, I mean, gosh, that was more than like 10 years ago. I was getting old there, but definitely there's several aha moments in around that period of time, because, you know, I entered the job market kind of after the 2008 financial crisis. And if you remember, I mean, Bitcoin was created, but I wasn't paying much attention. In all honesty, I should have, but I didn't. But anyway, like, and then you have Occupy Wall Street and all of those things happening, right? And then I think throughout 2010, like that 5 periods, it was still a lot of markets up and down. I think my background, I came from the sort of the quant side of things. I always love number. I love to understand how the maths behind things work. And I think also it was just the nature of my job at the time, because at Man Group, Man Group is basically, you have discretionary sort of like traditional type of hedge fund investing, but you also have quantitative type of investing called AHL, entirely model driven, algorithmic. So I get a lot of exposure to that. And my job at the time, especially in the last year at Man Group, I was covering global macro hedge fund. And those include people like sort of the top sort of quantitative trading firms. And that started to change my mind, because around that time, you know, AI started to become a thing and everyone's about data science, etc. So to me, I'm just like, if I just stay in the traditional finance, clearly that is not going to work. You can do as much fundamental research as you can, but market structure and the sort of the dynamic on the day, on the hour movement, there's a lot more statistical modeling and a lot more sort of AI data driven things. So it was purely like driven by that. At the time, I was like, I want to do data science. That was actually my original motivation. I know I want to change my career and I wanted to do more like data science, nothing to do with blockchain. So it was really, and I applied to a bunch of university, and I came to Stanford to do my second master's degree. But it was purely by chance, because, you know, at Stanford, the benefit is you have such a flexible kind of range of curriculum you can choose from, and you can just earn credit, whatever it is. And, you know, I've chosen like CS 251, that was by Dan Benet, which is around blockchain and cryptocurrencies. And I might be wrong in the title, but it's blockchain, something around blockchains. Yeah. And then another one, the other class I took was with Professor Tim Rothgarden, who's now no longer at Stanford, but anyway, he's at Columbia. But at the time, he was teaching incentives in CS, which is a different class. Those two classes really shaped my interest, like massively. Like, despite me applying and getting the place at Stanford studying data science and AI, I took 0 classes in AI ultimately, and it ended up spending all my time in blockchain, because what really drew me to this field is, you know, it's so interesting because for the first time, like, as I appreciate blockchain, it's not like about what is the price of Bitcoin or Ethereum. It's more just about what is the incentive mechanism design as you think about a protocol. When I first started blockchain, I was doing research on something called Mimblewimble. I think it's about I don't even remember very well, but it was something on privacy design incentives. And it was just so cool to think about how you can like change all these different parameters on the blockchain, but everything is verifiable by code. So it's kind of combining my knowledge in economics, finance, but also now I'm learning about computer science and stuff like that all in one go. And that really drew me into blockchain. So.
I think you even started to tutor yourself in the blockchain class. Is that correct?
Yeah, I guess I got good enough because I never studied coding, so I was studying like, the most basic one. But I did love like blockchain stuff. So in my first year, I took the class, and then the second year, I became the TA and RA to Danbene to help him to teach the class CS251, which has been great. So yeah.
That's amazing. Yeah, I'm pretty sure that shaped your whole kind of view on that industry as well, and
100%.
brought you here. Now the next step is Solana. I think you could have, went in a few directions. Can you help us understand a little bit what drove you here, your motivations, your why, your mission personally in the space right now? Like, you just joined Solana. It must be like a very overwhelming and exciting time. I'm very grateful that you're taking the time to already hop on a podcast now after just joining. What drives you forward now with Solana, and why did you choose that path for you?
I think I definitely felt an urge that I wanna build things seriously, right? I think I learned a lot of stuff when I was at Visa, and it's a very institutional place, and I really appreciated the perspective and understanding the inner working of how different processes work and function. But I think especially, throughout the last few years, as the industry sort of came out of the bear market and start to build again, like, I don't want to stand on the outside and just watching all the real things getting built. So there was clearly an urge for me to get really into the deep end of things and be part of that ecosystem. And I think, it's both like, I come to Solana at the right time, right opportunity. But like, I did get to know Solana since 2022 when we were doing a bunch of work and we were talking to a lot of protocols, including Solana. And what really struck me the most at the time, like the vision and the technology about what Solana represents really stood out to me compared to many other chains, because I remember we had Toli and Dan Albert and many people coming to our office and talking about what Solana is, how, all these parallel like compute and things can help latency and like localized fee market design and stuff like that. It was just incredible to hear these things coming from founders and explain it in such a intuitive way. And I also just think that over the years, Solana definitely had its many different phases of things. And I do feel like right now it's at a very kind of balanced place, right? In the sense that it has the deepest liquidity of all the chains that we're seeing out there. But it's not like it's just focused on institution alone, nor is it just focused on meme coins alone, right? It has that nice balance. And that's important because for any sort of new allocators, capitals coming onto chain, you need to have that diversification. And that's super important, which is you need to have both the retail side as well as the institutional side. And I think whether that's organic or that's intentionally designed, like I think throughout the years, the different phases of Solana, the growth and the low points and stuff, I think it actually shaped out in a very well-rounded way. And most important, it's also really battle-tested, right? I think Solana at the very beginning, a lot of bad reps just around the fact that it's always down and there's lots of things. The uptime time is hard. But guess what? I think the last 2 years is nothing has happened. And we went through some crazy moments in the markets in which you have the 1010, you have like other meme coin like things. But everything stays as is. And I think a lot of the stuff around, how would the fees, the gas fees on any given network will be affected. And I think just by design, the fact that Solana, the technology is so like thought through that, it's this localized fee market design. It's actually a pretty remarkable thing if you compare to the EVM side of things. So I think those little details, when it comes to like real testing time, will show the strength. And to me, I think, having that technology side is really important because ultimately there's only two things that matter the most: technology and liquidity. And whoever has both of them, I do believe will win, and hence I'm very bullish on like what Solana can do, and also like a lot of the opportunities that's yet to be tapped. And I think this is my job, and I feel like my journey is a reflection of the Solana's transition itself, right from the like the DGen, the DeFi kind of things, now towards the more TradFi, and hence attracting people like myself. But I also therefore feel that there's a lot I can contribute in the sense that bring that institutional perspective, as well as having a lens of how they might be thinking, to explain back to some of the Solana ecosystem, to just be like, we need to understand each other in order to work together. That's the fundamental thing. So things like, privacy and stuff like that, I think is becoming like now a really important focus on the team, because we recognize that's something, for example, institution would really need to have.
Definitely. Yeah. I think one of the most bullish and convincing things that can happen to an ecosystem like Solana is having people like yourself joining and having a conviction. Honestly, like it's a very green flag. It's a very good signal. Because you have an extensive career. You saw a lot of things in traditional finance. You worked at Visa for a long time. You looked at other ecosystems. You helped to push, I think, Starknet integrations at Visa as well. So you definitely understand that ecosystem as well. And then yet you ended up at Solana, and now you have that worldview. So that is a very, like, our job at Solve Brothers is also to let the people know why we're bullish in bears and bulls. And this is a perfect example of that, honestly. And I, appreciate people like yourself joining the mission, to push forward. What exactly is your mission at Solana now when it comes hands-on? Like hands-on.
Yeah.
Like what are you as in your role, digital asset, leading that department? What are the milestones? What are the goals here for you personally to achieve in that sector?
For sure. So my role is really leading on product side for the Solana Foundation. Now, it's kind of interesting as you're thinking, from a foundation perspective, what realistic kind of product would you be building? I think the way to think about it is more like there's certain type of things that might just be public good, right? It's never going to make money and not be incentivizing enough for startups to build necessarily, but you need those base infrastructure layer that can then help to promote the overall ecosystem growth. So I think my job is to identify what kind of public infrastructure or public goods that might be needed on the ecosystem as a whole. That's a good example. And therefore, to help to really, either we build it ourselves or we can incentivize the ecosystem to build. So again, I mentioned about privacy, and that's an ongoing effort, because it's not that Solana doesn't have privacy already. It's more just, we have so many different, I think, genius engineers over the years that create this thing and that thing, but it's hard to really kind of identify all the different dots, right? So first thing first, I just need to connect all the dots together, make a more kind of consolidated narrative. So then for an enterprise who want to discover more about Solana, you present them all in a single piece of slide or whatever for them to pick their own journey. Now, the second thing is, if we do identify the certain elements of privacy that, say, a category of enterprise would really want to have, then my job is to figure out, well, should we build it out ourselves? If it's a protocol or standard side of things that we can build from a foundation side or on the lab collaboration, or is it, say, we need to incentivize like the sort of the ecosystem partners on Solana to do. So for example, recently what we have done is we launched this it's kind of in research development phase, but the code is all there. It's called Contra. So Contra is sort of like a private execution infrastructure that we can offer to any financial institution to use directly on top of mainnet. So very different from having like a localized L2 or whatever. This is more like, think about it as a payment channel. So if you're a bank, right, and you want to say issue your own stablecoin or issue your tokenized deposit, but then for the rest of those activities, just like if you have a bank account at Chase, you can transact with other Chase member, but like no one else can see those transactions. So naturally, as a bank, if you come on chain, you would want these kind of private transactions available because you're doing essentially intra-banking activities. That's just pertaining to your own kind of parameter. So how would you do that? Well, Contra offers you a solution to do exactly that without losing the access to mainnet liquidity, which is really important. So that's a good example in which, like, I helped to push out together with our team that build out the the architecture. And
Mm-hmm.
we're using as one of the many toolings on Solana to help institution to identify if that would work for their specific use cases. So again, just kind of coming back to what does product mean from this lens?
Mm-hmm.
Anything that is either public infrastructure or good that we can help to promote, we will do so. As well
Mm-hmm.
as the most important goal is for our ecosystem to succeed. And I think therefore, whatever it is, it has to be aligned closely with the ecosystem as a whole. We are never ever going to build like a competing product or like any
Yeah.
commercializable product, right?
Yeah.
But our
Yeah.
goal is to figure out, say, platform aggregation layers that can then funnel through to the rest of the ecosystem, and how we can do it in a better way to connect
Mm-hmm.
all these dots such that
Mm-hmm.
you make it really accessible for an institution to use. That's the primary goal.
Yeah. It's a very, there's a lot of, you got to be very subtle at looking at this problem, I feel, because there's a fine line to walk between what needs to be built inside and what needs to be built outside. Are we going to build something that might compete with an existing protocol that is trying to survive on Solana? Because that is probably the worst thing you could stumble into.
100%.
And then identifying these things that are necessary, though, and no one builds them because of the missing incentives. That is a very positive thing for the whole ecosystem, though, because that's exactly what foundations should do, in many people's opinion, in my opinion as well, is just push the ecosystem forward as a accelerator, as an enabler, right? We bring the horsepower on the street as protocols, as media companies, as like we're the businesses, the industry, but foundation needs to enable and accelerate. And I mean, accelerate is literally the theme of the
Exactly.
of Solana.
You put it exactly
So,
right. Yes.
Yeah, that is actually, it's great. I'm definitely also very convinced personally, as I'm super biased, that Solana Foundation is running the best kind of approach when it comes to being a foundation for a blockchain. It just works really well. Cool. Now, coming to an end, Catherine, I, in respect of your time as well, and also we already covered like a lot of ground here. What I think I read here and there that you talked, especially about stablecoins a lot, that we're still very early in that industry, and we haven't even reached half of the potential, maybe not even 10% of the potential where we're going. So I see already you confirmed that is, I saw that correctly, and I think that like a lot of people are saying the same thing. Why do you think especially stablecoins are still, why do you think there's so much potential over there? What's your thesis on stablecoins really is the question in the next 5, 10, 15 years going forward? And then the last part of that question is what's missing? Like what are we 2026? What needs to happen? I suspect it might be in the direction of regulation. You kind of hinted at that here and there already, but there might be more to it. So where are we going? What is missing?
Oh, that's a big question. I'll try to unpack it. But yes, you identified correctly. It was I think it was on one of the podcasts I had recorded with Citi last year. They were asking on the scale of 0 to 10, where are we? And I said 0.5. Not because I was bearish, but I was bullish, I was a little conservative, right? And trying to be cautious about like on the optimism that we see in the industry. I mean, it's just, as I said, I've talked to over 100 banks like last year while I was at Visa, right? And I get the sense of interest and energy, back on the back of all the macro trends. But how much has the needle moved? I would say it's still little, because, I don't think institutions have thought about stable. And why do I talk about stablecoins and stablecoin only? Well, it's partly just because that was part of my job, because I focus on money movement and payments. Yeah. Hence, that's the critical part. But I do think institutions haven't took the time to really explore the use cases and such until last year, probably for the right reason, just because even till now, like 80% of all the stablecoin trading volume happen in DEX or happen just in the crypto trading world, is not really spilling over into the real economic activities, if you will. And hence, that wasn't like a necessary part of the equation. But I do think going forward, as we're seeing more, say, merchants, more kind of trade finance, banks embracing on the usage of stablecoin, you just have to kind of put a lot more emphasis onto that. So to me, that's why, right now I think we're like that, probably a bit more than 0.5, but, incredibly bullish, just because stablecoin is the bigger part of the story of tokenization, right? I
Yeah.
have always been, I just think this is the thing that any blockchain or like collectively as the industry we can do, because
Mhm.
you can tokenize anything, right? It's not just like finance stuff. It's you can tokenize yourself, your identity, your wallet, whatever you want. It's just that space, how much of an investable space is out there is crazy to
Mm.
think. And
Mhm.
again, why is stablecoin important? Well, stablecoin as a naming for this overall money on chain is like it represents liquidity that you would need in order to cater for this growing piece of tokenization theme. So if we believe, and like I think total investable equities is like hundreds of trillions of dollars. So if you think just a sliver of that will come on chain, we're talking about trillions of dollars. And right now, 250 billion of stablecoin liquidity is here. So there's a
Mhm.
big place room to grow for everyone, right? So I think the pie is definitely big enough for all of us to kind of work on this. So that's number one thing. And hence I'm very bullish in terms of like, what do I expect? I don't know if everything's going to obviously happen in 2026, but I think the
Mm.
trend is clear, and maybe sure the market goes up and down. But from a secular trend growth perspective, I do fully believe that this is the right place to be. Now, what is missing? I think going back to that tokenization piece, we need to think about what are we tokenizing? Like, if you just kind of copy and paste things, I don't think that's really value creation, right? Because it's like something already exists somewhere else. You
Mhm.
just create a digital representation of that on chain, but the
Yeah.
actual underlying value is still already there, and it's also off chain. That to
Mhm.
me is not, it's kind of like the transition phase, but nowhere near close to the aha moment where like, this is the true thing we're looking for. I think in the
Mm.
future it will be, natively issue new things that is directly representing value in and of itself, directly living on chain, whatever that might be. I think that's really important. Tapping into a lot of the inaccessible or uninvestable type of things today,
Mhm.
but bring it on chain. That's also another
Making
important
liquid.
thing. But also just think about the fact that if you're family office, if you're like a sovereign wealth fund to invest in any of these, it has to be in a way that's compliant and regulated, in the sense that, just like for any company to go IPO, you need to go through that whole process that's required to show that, everything has been, I don't know, like screened and stuff in the correct way. It's sort of
Mhm.
similar analogy here, that for these tokens to be worth of investing, you have to show that you have went through the KYC, KYB process, work compliance, and so on. I think that
Mhm.
is a missing piece that is not yet like fully mature on the ecosystem. And then there's the
Mhm.
risk management side as the other side of the coin that needs to be really mature. I think with these things in mind, then you can start anticipating tokenization to really take off for serious capital allocators to come on chain. And that's where really the money meets demand. And hence, I think about Solana kind of as a marketplace, right? You have that capital allocators, and then you have the assets on the other side. We provide
Mhm.
the perfect neutral infrastructure, whether that's for retail or for institutional players to come and meet. So that's kind of where the things will play out.
Yeah, yeah. I think it's going to stay extremely interesting over the course of the next, let's say, 3-4 years, because it's accelerating so much right now. We've been in definitely in the MVP stage in the past years, but it feels like we're starting to cross the chasm, and
Mm-hmm.
on that path, the only way is acceleration again, right? Like it's going to speed up that whole process. Amazing, Catherine. Thank you so much for sharing your time and insights to these topics and jumping on. We're gonna wrap it up here. People can find you on Twitter as well. It's at Catherine Gu underscore. Is that correct? Correct me if I'm wrong.
Cat goo, yeah.
Cat Gu. Easy, even better. Cat Gu and then an underscore at the
Yes,
end.
underscore.
That's how you'll find Catherine on X. So feel free to follow and follow her journey over there as well. Thanks for coming on,
Thank
and
you so much for having me.
thanks everyone for watching and tuning into Saul Brothers. Make sure to check the videos also on YouTube. If you're watching this on Twitter, we do have a YouTube account at Saul Brothers Pod. You can subscribe over there as well to see more of these interviews. Thank you so much, and we'll see you at the next one. Awesome. Catherine,
Yeah.
that's a cut. We did a cut over there. We're still live, but the recording's over.
No, that's great. I really enjoyed the conversation. So thank you so much for inviting me. But let me know if you have anything else I can be of help. But yeah, we're just trying to promote everything we're doing here. So yeah.
Yeah, I appreciate that, Catherine. I'll definitely reach out. As you know, I already pinged the other day. Unfortunately, we couldn't show up at that event. Are you going to be at the next one? There's another one in London coming up, I think.
You should. Are we live on Twitter? Still?
Yeah.
Oh, okay. Well, you can connect with our head of institution in Europe, Ben Brophy, to connect. But we do have another, House of Soul. If for all the people who are listening, like House of Soul is happening in London, I think once a month. So next month is going to be an allocator kind of event. So I think that should be a really good one.
Cool, amazing. All right, cool. Then we're going to wrap up the stream as well. And Catherine, you're good to go. Just try to let me check the recording real quick. If it's there, it's uploading. It should be done. It will ask you when you hit the exit button now. It will ask you to stay on the stream. My co-host says hi as well here, by the way.
Hello. Good to see you. All right, awesome.
Cool. Thanks, Catherine.
All right, have a good day. See you soon. Bye.
Thank you so much. Bye.
Across emerging economies, people skipped bank cards. They built their own ways to pay. QR codes, local rails, systems that fit real life. Because of card networks like Visa and MasterCard, you and the merchant are forced to hand over a significant amount of money every time you pay. That never made sense to us. So we built Surf Cash. Spend your crypto with simple QR payments, just like cash. Without cards or middlemen, more of your money stays with you. You stay in control with a self-custodial wallet and earn up to 15% yield. Because if you're using the system, you should be the one benefiting from it. Launching across 12 countries for people who earn in crypto and live in the real world. A bank that is truly useful and respects your money. A system that is built for everyone. Surf Cash. Get the app and start paying with it.